From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 10, 2016. Today we're going to be taking a look at the GBPUSD, the Great British Pound, versus the US dollar for today's trade analysis. Over the past week or so, we've had some news out of both the UK and the US that caused this currency pair to have a pretty decent sell-off, falling from all the way up there into the 1.3300s down into the 1.2900s. So a pretty decent fall off here for the GBPUSD on news, again, out of the UK and the US over the past week. Yesterday, we saw a sell-off of the U.S. dollar. Sell-off of the U.S. dollar tends to cause this currency pair to go back up again. And let's go ahead and zoom it in here on the daily time frame so we can really get a handle on what's been happening. You can see the fall-off here over the past week or so, coming all the way back down to 29.90. And then yesterday, the sell-off, and beginning today, the sell-off of the U.S. dollar causing that rally back into resistance. Take a look at this yellow shaded area right here in the middle of the chart. 1.3085 to 1.3115 is that yellow zone. We see several times in history where we see support. There's little blue circles here, kind of distorted here on the chart. But there's some little blue circles here on the chart. Let me see if I can widen some of these out, where the market found support into that yellow shaded area. So support historically can help us identify future potential resistance. So if you can see all these little blue circles that I have back here, support, 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 even right here on this fall, we found support into the yellow zone. So today we see the retest under that yellow shaded area as resistance. So for the day today, as long as it's underneath there, because fundamentally speaking, again, over the past week or so, it means this currency pair should be short. We see that rally into resistance, giving us a better opportunity to go short actually on a rally into this resistance zone. So it's clearly a decision point. From what the yellow zone has shown us before, we're underneath it as resistance. It provides a lower risk and higher reward opportunity to go short on this rally higher. 1.3085 again is the bottom of that yellow zone, so I've gone ahead and taken a sell at 1.3085 here. The risk, of course, is that it breaks back above the yellow shaded area. So your stop loss should be somewhere above 1.3115, above the yellow shaded area. It depends on how much risk you're willing to give it. But again, we just don't want it to break back above that yellow zone, because if it does, it's going on up here into the 31 towards the 3200 level again. So the clear point is staying underneath the yellow zone. Back to the purple zone will be our first target, because that's clearly our current support. That's the first target on the way down. And as we looked at in the live trade room yesterday, over here with the blue boxes on the left-hand side, if it can ever get underneath that purple shaded area, and we'll call it 1.2990. If it can get underneath there, we'll look for it down here to the orange zone, 1.2900 at the bottom of the chart. Let's take it down to the 4-hour time frame. None of that really changes, just gives us a little bit of a zoomed in view, and there's all those circles that we looked at over there on the left-hand side where the market found support. Look at that again here on the 4-hour time frame. Let me see if I can get it into a better viewpoint here. Let's just pull it. There it is. You can see the support back here, all these little blue circles. Support, 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 and then now we are here underneath it as resistance. As long as it stays underneath there, again, I think that this is a lower risk and higher reward trading opportunity to go short here for the pound dollar. And the only reason I would expect it to go higher is a breakout back above 31.15. So I've again gone short into the yellow shaded area. One last thing here before we move on. Fibonacci from the highest high down to the lowest low. Interesting here, we find the 236, the market just sitting on top of the 236. 382 is at 31.15, the top of our yellow zone. So again, that gives us a good clue that this yellow zone, even the top of the yellow zone, 1.3115, will likely be some resistance based on the Fibonacci retracement level there now at the top of our yellow zone. Even if it touches there, we expect resistance and maybe a little bit of a bounce back down for the pound dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.